In today's video, we delve into the gripping world of cryptocurrencies and the latest developments in the ongoing saga between the SEC and two prominent players in the market, Coinbase and Binance. Strap in while we dissect the lawsuits, explore the implications, and challenge the notion that this is the end for Bitcoin. So the writing was sort of on the wall for Binance when in February, after the FTX scandal, Kevin O'Leary said this.
Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went.
Lots of other reasons to be sure. Just briefly, it says in a Google search, he used that money for his personal benefit. Including to make personal investments and to cover expenses and debts of his hedge fund Alameda Research. So, yeah, lots of other reasons, and I think that we need to be focusing on those reasons and not necessarily on Binance. Not that I'm a fan of centralized exchanges, but I think the writing was on the wall for Binance and really any exchange after the FTX scandal. Anyways, it goes on from there. So yesterday, they released part of the SEC lawsuit, where a Binance compliance officer made a comment to an SEC agent, clearly taken out of context. But you can pretty much understand the context. He's probably responding to some ridiculous statement that the SEC made. He says, "We are operating as an effing unlicensed security exchange in the USA, bro." Like, of course we are. We don't have any regulation. You haven't been clear with us on what we're supposed to do forever. So how could we be licensed? And when we do try to get licensed, you just shut us down. So clearly taken out of context, be interesting to know a little bit more, but that's what we got for now. So yesterday, Binance on the news had about $700 million in withdrawals. And according to this, the writer of this article, it says no sign of letting down the withdrawals. But CryptoQuant did an analysis that showed that this is within historical norms. Whenever there is bad news in the crypto industry, people flood to sell. That's just it's just human emotion, right? So, but not outside the norms, and a lot of other exchanges, as you can see here, also suffered massive withdrawals. So, not any new news there, and certainly shouldn't come as a surprise given Gary Gensler's whole take on, well, at least today, his take on the crypto industry.
$100 trillion capital markets. It's not a matter of lack of clarity. I think this is a field that, in the main, has built up around non-compliance, and that's their business model. And they have chosen, even though it's not the law, they've chosen to be non-compliant and not provide investors with confidence, protections, and it undermines the $100 trillion capital markets. It's not a matter.
Clearly, he's being a bit facetious here. If they don't provide any regulatory clarity, how are they supposed to be compliant? Coinbase has got another lawsuit with the SEC for providing staking services to clients. You can see it's sort of like it's a combined effort between a bunch of states that have been included in the lawsuit, running concurrent with it. There's the Alabama Securities Commission, included Alabama, California, Kentucky, New Jersey, Vermont, Washington. So it's sort of a colluded effort to stop the on and off ramps of crypto. So anytime you want to turn your cash into crypto or your crypto into cash, they believe that they can remove the liquidity from the market. They can shut crypto down. But Bitcoin's proven to be a little more resilient than that. So they did provide us with some clarity, though, yesterday. They did tell us which tokens are actual securities in their view. So, of course, BNB, which is Binance's token, the stablecoin BUSD that they use, Solana, Cardano, Polygon, Filecoin, Sand and Decentraland, the two metaverse coins or tokens, and Algorand, which Gary Gensler had some pretty positive views on that when he wasn't a politician and when he was just an MIT professor, and which he said in his lectures and in his TED talk. He praised the token for its technology. But now he clearly, as an employee of the Biden administration, has a very different view. I'm no fan of centralized exchanges, but there was an employee yesterday that worked for Binance about 2 years ago that made a tweet yesterday, and he said some good things about Binance. Truly, we don't know what's going on behind the scenes in a centralized exchange. Unlike DeFi, where everything can be verified in almost real time, in terms of liquidity, who created the coins, who owns most of them, all that kind of stuff. We don't know that information with centralized exchanges. But this employee did say, he said, I could talk all day about how Binance surprised me over the course of 2 years. I never saw anything shady, anything that was done with bad intention. You would be so surprised how seriously Binance takes care of its users and their security. Yeah, a little bit, take it with a grain of salt. I mean, who knows? We don't know why he's saying this, but he also did have some good things to say about CZ, about how he listens to them, and how he responds to messages and their ideas. And clearly, he's not just some intern at Binance. He's was a high-level employee, and here's a picture of him with CZ that he also included in his tweet. So Operation Choke Point 2.0, which is coordinated efforts by the Biden administration to cut the cryptocurrency industry off from the U.S. banking sector in the Securities and Exchange Commission. So, like I said, this is their goal, is to remove all the on and off ramps. They started with the banks. Now they're going for the exchanges. Anywhere you can turn your crypto into cash or your cash into crypto. True, we didn't use these banks, but these banks were relied upon by crypto exchanges. But you can see that when they did collapse, Gary Gensler tried to put the blame on crypto, even though it's
Narrative as well.
And my time is up. Thank you, Mr. Chair.
The biggest, Silicon Valley Bank, actually, when it failed, you saw this country's, the world's second leading stable coin, had $3 billion involved there, DPEG. So it's interesting just how this was all had some crypto.
Yeah, I mean, it's interesting to me that Gary Gensler is trying to say that because the Circle, who created the USDC coin, left their money in a centralized bank, how that threatened the entire financial industry. No, it threatened the entire cryptocurrency industry. A little bit of vice versa. Of course, crypto's taking the blame, but we know differently. I mean, even if you go to Google and you Google why did Silicon Valley Bank fail, it says Silicon Valley Bank used to lend out money in short durations. However, in 2021, they shifted to long-term securities such as treasuries for more yield, and they did not protect their liabilities with short-term investments for quick liquidations. So it was not because of crypto that that these banks failed, but interestingly enough, these were banks that crypto exchanges used, and we all know that it just takes a little bit of bad news or a little bit of a suspect opinion from somebody who has a lot of influence in the right place, and clearly it can cause people to line up at the bank. And we all know that the bank doesn't have all the money, right? They use your deposits to invest in things like treasuries, hoping they get more yield from them, and offer you absolutely nothing, most 0.5% in a long-term savings account, but nothing in a checking account, of course, or in a business account. The Silvergate Bank said that it wasn't an insolvent bank, but was taken over by the FDIC. And this is important because Silvergate Bank had the SEN network, and the SEN network was a 24 instant settlement service that the bank's clients could use to conduct transactions between each other at any time, including nights and weekends. The bank counted a number of major crypto firms as its clients for the service, including Binance US, Kraken, Gemini, etc. So by going after these banks, they were basically able to take away the banks that the cryptocurrency exchanges used. And of course, there's lots of people that want their money. They want to turn their crypto into cash. And the crypto industry is a 24/7 market. So this assisted this assisted crypto in a big way. And there was some talks that SBF had met with Gary Gensler and had discussed this network with him. Clearly, the FDIC, the Fed, and the central banking system is not going to be in favor of such a system, even though they're coming out with Fed now 24/7 or something like that. But that's a topic for another day. But even Forbes magazine came out and said that Signature, Silvergate, and Silicon Valley Bank are the second and third largest banking collapses in U.S. history. But even they point out that the true culprits behind the banking crisis were a mixture of corporate mismanagement and inconsistent regulatory responses. So clearly, not like Gary Gensler says, crypto was not responsible for these banks failing. It was their own mismanagement. It was their own poor investments. And in fact, when these treasury investments didn't work out for them, they even doubled down on them later on in hopes that they would turn around. And policy decisions made by the Fed obviously prevented that. I mean, high interest rates, took a lot of liquidity out of the market. So then we have Coinbase, who has been one of the most regulatory compliant exchanges in the world, and has tried to be known for its regulatory compliance. And they clearly say, we asked the SEC for reasonable crypto rules for Americans. We got legal threats. Well, now they have more than legal threats. As we discussed earlier, they have the lawsuit that was released by the SEC today. They had one that was a few months ago. They had to stop their staking services. In addition to that, we had another large cryptocurrency exchange in the US, Bittrex, that was also sued by the SEC for operating an unregistered exchange. As an unregistered exchange broker. I mean, how are they supposed to get registered if every time they apply to get registered, they get denied? And they say, oh, because there's no clarity. Well, they're not providing any clarity. So it's, all par for the course for Choke Point 2.0. And then we have Kraken, which had a $30 million settlement and agreed not to provide staking services. Staking services offered by a central exchange are not required. You can have a private wallet and stake your coins. You do not need to do it in a centralized exchange. These all use the trust-based model, where you have to trust that Kraken is going to give you your money back. You have to trust that the bank is going to give you your money back. And this is the problem with these systems. We proved that human-made systems cannot be trusted, and for a variety of reasons, not because of any type of fraud in a lot of cases, but because we're relying on human nature in a lot of cases, whereas Bitcoin was created to be trustless. So yesterday, Mandrick made a comment on Twitter, clearly as a joke, but this is the sentiment amongst a lot of new users in crypto. They see what's going on with Coinbase. They see what's going on with the crypto banks. They've seen what's going on with Binance now. And they think that it's over, right? So he says, in 2011, I said Bitcoin is the future so long as the SEC never goes after Binance, which is, sort of a jest, because Binance wasn't created until 2017. This guy points out, he says, this underrated tweet lets you know who the real OGs are. We don't need centralized exchanges. Currently, they are an unnecessary evil, because we need to turn our crypto into cash, and we need to turn our cash into crypto, and these are the on and off ramps. So expect more of this to come, but we have survived much worse. There was the greatest, what do they call it, bear with me. They call it the legacy of Mt. Gox, the Bitcoin's greatest hack. So if you don't know, Mt. Gox was the first cryptocurrency exchange created by Jed McCaleb, who also created XRP and now Stellar. And he created it as an exchange to, I think, trade like hockey cards or other types of collectibles. And it gained a lot of traction. And eventually this guy, Mark Capellas, he bought it, and he mismanaged it, and he didn't have a lot of technical experience, and it got hacked. When a reporter found out to him, he said, we had a weakness in our system and our Bitcoins vanished. Like it was a couple, but it wasn't just a couple. It was 750,000 Bitcoins, roughly 7% of all Bitcoin that existed at the time. A reporter points out that stolen loot from Mt. Gox is now over 3 times more valuable than the top 10 bank heists in all recorded history. They had about 250,000 Bitcoins left over after the hack. And this bankruptcy has taken about 10 years to date to sort of unfold. And now the 200,000 Bitcoins are worth substantially more than what they owed people in dollar value at the time of the collapse of the, let's call it a debacle. So that's another interesting aspect of this. But at the time, many thought that this was the end of Bitcoin. Peter McCormick, the host of What Bitcoin Did, he made a comment. He said the price of Bitcoin, of the BTC collapsed, and it seemed like to many that Bitcoin was done. Tech reporter Kevin Roos wrote that the Bitcoin dream is all but dead. Max Kaiser and a lot of other personalities within crypto had a suspicion that this could be it for Bitcoin, because it was at the time 85% of all trading volume in Bitcoin was done through Mt. Gox. You literally had to go to your bank and tell them you wanted to send money to Japan. And it took a week to get there on a wire transfer, and then they deposited it in your account and bought it. At the time, nobody at the bank knew what Bitcoin was, and so it didn't have the name recognition that it has today, so even that was a task. So Peter McCormick also points out, he says, looking at the past 13 years of history that includes Mt. Gox and Silk Road and FTX, the fact that it is still here is its strength. It's very hard to kill a blockchain, and it's very hard to kill Bitcoin. Bitcoin is quite different from the other coins and tokens, because there is no CEO, there is no foundation, there is nobody behind it. It was developed by a community. As we all know, the person that's with the idea disappeared. But at the time in February of 2014, Bitcoin had a market cap of 8.2 billion. Last summer, it had a market cap of 1.2 trillion, and today it has a market cap of 535 billion. So clearly, this was not the end of Bitcoin. If it can survive Mt. Gox, it can survive literally anything. We will always have peer-to-peer. So here's the white paper from Satoshi Nakamoto, and he points out this is why he created Bitcoin. Was commerce on the internet has come to rely almost exclusively on financial institutions serving as trusted third parties to process electronic payments. While the system works well enough for most transactions, it still suffers from the inherent weaknesses of a trust-based model. This wasn't only to eliminate banks. This was to eliminate all centralized authorities. We do not need, with the creation of Bitcoin, a trustless system, we do not need to have somebody else hold our Bitcoins for us or hold our money for us at that point. But with financial sovereignty also comes great personal responsibility. I mean, you can't lose your keys. You can't lose your password. You have to do your transactions properly and monitor them. There's no one to call up. But this provides a lot of us with safety. We don't have to trust anybody. We only have to trust ourselves. So, but like I said, there will always be peer-to-peer, and there's always other countries that are willing to take the innovation and start using crypto. China banned Bitcoin in 2017, I think 2017, and 21% of all Bitcoin holders continue to hold it, continue to use it. Many of the companies left China, but people still held it. If you ban something, even in a country where people are generally afraid of their government, they will still hold Bitcoin to preserve their wealth. Just because you make something illegal doesn't mean people aren't going to do it. Clearly, evidence of that is the murder rate in the United States, which is clearly, I mean, murder's illegal, people still do it, right? So On the news, like I said, Bitcoin is quite resilient. Just a blip in the road. It went down to about 25,000 when I started making this video, and now 25.4, and now it's back up to 27,000, up 6% on the day. So clearly, people are buying the dip. Anytime you see red, you should be stacking sats. Buying the bears if you can live like a king in the bull. So I'll finish this video off with my favorite tweet of all time by Tippinen. He says, I don't even care about profit in Bitcoin. I just want to see the governments and banks piss themselves. A truly revolutionary tweet for the time in 2011. He's pretty early there. But to conclude, these recent SEC lawsuits between Coinbase and Binance have stirred significant controversy within the cryptocurrency community. I've seen nothing else on Twitter and news outlets and YouTube the last few days. But it's crucial to remember that Bitcoin has weathered many challenges and has emerged stronger pretty much every time. These lawsuits should be seen in the broader context of the ongoing battle between traditional finance and decentralized currencies. Anyways, if you made it this far in the video, I appreciate you. If you enjoyed it, please hit the like button, subscribe, and I'll see you next time. Bye for now.